Jai Hind friends. If you are new to this channel, please hit the subscribe button so that you can get regular update whenever a new video is uploaded. And in case you like the video, please do hit the like button. It will help the video reach more and more audience and more people can benefit from the video. This is in continuation with the video I uploaded yesterday regarding a portfolio. So now we are at the second portfolio and you can see that the invested amount is 49 lakh. Current value is 52 lakh. Currently there is a profit of 2 lakh rupees, which is equivalent to 5.53%. In this portfolio, we do not have many new companies. We already have discussed all the other companies in the first video. So in this video, we will keep it very short and we will only go deep in companies which we haven't discussed yet. So let's start. So first company is APL Apollo. Quantity is 236. Investor amount is 1,83,000 and currently there is a profit of 58%, which is equivalent to 1 lakh rupees. And now I'm at the chart for APL Apollo tubes, and 1 year return you will see 56% return. 5-year return 539% return, and maximum return is 8,900%. And you'll notice the same thing which we see in a good company going from the bottom left to top right. So here you can see the business of APL Apollo. So APL Apollo Tubes is one of the India's leading branded steel product manufacturer, and it is manufacturing currently 1500 varieties of MS black pipes, galvanized tube, pre-galvanized tubes, structural ERW tubes. So these are all type of tubes, and the product that it manufactures serves the industry like urban infrastructure, housing, irrigation, solar plants, greenhouses and engineering. So this is not a core metal company, because I always say that metal companies are very cyclical in nature, so we should avoid those metal companies. This company, we can say, provide a supporting role to the metal industry, just like we discussed earlier that Astral, Asian Paint, Pidilite, they provide support to the real estate industry. And here you can see that this company is the dominating player in the domestic market of steel construction pipes and presently commands 50% market share in the same. And its market share has grown exponentially from 27% in FY16 to 50% in FY21. So the business looks very good. Company has command on 50% of the market share. And now I'm at the quarterly result for the company, and you can see that the quarterly results were also very good. In December, the sales increased by 33% on year-on-year basis, and the profit for December quarter was 273, which was in last quarter was 202. And you can see that from the past quarters the sales are increasing at a very healthy rate. Now we are at the return profile for this company, and you can see the profit compounding. Profit compounding looks very good. 10-year 27, 5-year 30, 3-year 56%, and for the 12 trailing month it is currently 12%. Sales growth also looks very amazing. 10-year 25, 5-year 27, 3-year 22%, and in the last 12 trailing month it has grown by 39%. Return on equity is also very solid, above 20%, and stock price CAGR is amazing. 10-year return has been 51%, 5-year 45, 3-year 82, and last 1 year it has grown by 57%. So this company, I don't think now I have to say anything. It's a great company to have in the portfolio, and you have already purchased it at a very good price, so you should definitely continue with this company. Next company is Asahi India. Quantity is 355, invested amount is 2 lakh rupees. Currently there is a loss of 10%. Now I made the chart for Asahi India, and if I look at 1 year return, 1 year return has been 5%. If I look at 5-year return, 5-year return are 46%. And if I look at maximum chart pattern is looking okay, going from the bottom left to top right, but within that there are a lot of fluctuation, you can see. So it's not a consistent compounder going consistently in the upward direction. It is going up, but it is going like this with a lot of fluctuation. And here you can see that Asahi India Glass is India's leading value-added and integrated glass solution companies, and a dominant player both in automotive and architectural glass segments. And here you can see it has dominance in auto glass market. It is the dominant player in the Indian auto glass market and is also recognized as the strategic supplier of choice with a market share of approx 73% in passenger vehicle segment, which means that out of 4 cars that you see, 3 cars have Asahi India Glass on them. And its customer includes Maruti Suzuki, Hyundai, Tata Motors, Mahindra, Toyota, MG, Renault and many more. And in the architectural glass market, this company is the second largest producer and supplier of glass in India. So the business looks very good. Company also have very good market share. Now let's look at how the company is doing in terms of sales and profit. The market cap of this company is still very less. It's just 12,000 crores, so it's a small cap company. Now I'm at the quarterly result for the company, and the sales for December quarter was 1010 crores, which was an increase of 21% on year-on-year basis, and the profit was 188 crores. And in December 2021 quarter it was 829, so definitely an increase which we have already seen. But the operating profit in last year December quarter was higher, which was 216, and in this quarter it is around 188. So there is a dip in the operating profit and a dip in the operating profit margin also. You can see that the operating profit margin is now 19%, which was 26% in the last year. So the quarterly numbers to me looks okay, although there is a dip in the operating profit margin, but these are all temporary issues. Company with good market share can recover. Its sales are increasing, which is a good sign. And if you look at the operating profit margin, which is currently 19% only, if we go a little back, you will see that company's operating profit margin was 15% also, 17% also, and it was able to increase it to 20, 23 and then 26. So company has that quality, company has that experience. So this is not a very big area of concern for me. I would consider it as a temporary problem. And now we are at the yearly numbers, and if we look at the yearly numbers also, there is certainly an increase in the yearly numbers. In March 2021 the sales were 2421, which increased to 3170, and for the 12 trailing month it is around 3890. And if you look at the profit also, the profit which was 431 in 2021 increased to 761, and it is now increased to 867. So we have seen the business, we have seen the financial also. So company's business is strong, it has good market share, and it is also generating good sales. The sales are also growing and the profit is also growing. Now I'm at the return profile for this company, and profit compounding growth you can see 10 year 22, 5 year 18, 3 year 21, 12 trailing month 41. So profit is increasing at a good percentage. Sales compounding, if I see 10 year, 5 year, 3 year is not that great, but in the last 12 trailing month it has shown a good improvement. Return on equity is also good, around 15%. And if I look at the stock CAGR percentage, 10 year has been 27, 5 year 8, 3 year 24, and in the last 1 year 6%. So although the profit of the company is increasing, the sales are not increasing that much, and the CAGR is also not very consistent. But to me this company does not look too bad. It's a good company, the business is good, the profit is also increasing, and in India, considering the population that we have, and as and when our middle class will start becoming more and more big, there will be a lot of people who will be buying cars, and eventually this type of company will benefit. So it all boils down to the conviction. If you have the conviction on the company's business, and if you think this company can do well in future, you should definitely continue. But if you have slightest of the doubt, and if you think that you have better companies currently available which can provide you much better and consistent return, then you can switch also. So it all depends on you. Next company which is in the portfolio is CDSL, which we already discussed in the last video, so we'll skip this. Another company is Davis Lab, which again was there in the last portfolio, which we have already discussed. Next company is EKI, quantity is 83, and invested amount is 1,35,000, and currently there is a loss of 61%. So this was the company that the investor mentioned about. So let's check the details of the company. And now I'm at the chart for EKI Energy, and today you can see there is a upper circuit of 10%. So people who invested yesterday must have been very happy. If I look at 1 year return for this company, company has provided minus 57% return. If I look at 5 year return, then this company has provided 1900% return, and this got listed in 2021. So it has not even completed 5 years. So here you can see the business of the company. This company is engaged in the business of climate change and sustainability advisory and carbon offsetting, along with the business excellence services. And in the climate change advisory services, it provides consultancy for validation, registration, monitoring, verification, and trading of eligible carbon credit projects. And 99% of its revenue comes from the carbon change and sustainability advisory and carbon offsetting area, and the remaining contribute 1%. So let's talk about only this business. So what this company do is it trades the carbon credit points. So you must already be knowing that there are a lot of countries as well as companies who have pledged to go carbon neutral in order to protect the climate and to reverse global warming. And in order to do that, they have two options. Either they move to sustainable sources of energy. So whatever energy these companies or countries are using, they need to move more and more towards green energy so that the carbon emission is less. Or the second alternate to them is buying the carbon credit points. So these companies or countries can also buy carbon credit points, which means that these are the points which they have not created, but it may have been created by somebody else who's ready to exchange those points in consideration for money. And this company is in the business of trading those points. And here you can see some of its clients. It's Airport Authority of India, United Nations Framework Convention on Climate Change, World Bank, NTPC, Bank of Baroda, and many others. So the business of the company is very new, and you can see the market cap also is very small. It's just 2,200 crores. And now I'm at the quarterly numbers for this company, and the reason why you're seeing such a huge decline in this company share is because of two reasons. One, this company has already given a massive run up, so it is kind of obvious that after such a massive run up, a company will fall down and will try to consolidate, and that can happen even if company is still generating profit. And second reason, you can see from the quarterly results that from the last 2 quarters the sales are not growing at a very good percentage. In September it was just 1%, and in December it has gone down by 40% on year-on-year basis. and you can see that the profit has also gone down. The profit was close to 140 to 130 range, and now it has come down to 47 crores. So the fluctuation is huge in this company, and this is what is expected out of a small company also. A small cap company with such a small market cap will perform like this. When it will go up, it will make money like this, but when it will start falling, you will not know till what level it can fall. And that is the reason I always generally suggest that majority of your portfolio should be in large cap and market leader companies, and then you can have some portion in mid cap, and the smallest portion should be in the small cap, so that it does not affect your entire portfolio even if those companies go down to 80-90% also. Now coming back to the company, since you have invested at the top, which was around 1628, if you want, you can wait also in this company, give this company some time, because the type of business that they are into, it's kind of unique and very new, so nobody knows how this company or how this kind of business will perform in the coming future. There can also be a possibility that again you might see a run up in this company, but when that will happen, nobody knows. So the call is completely on you whether you want to keep the company and wait for this company to bounce back so that you can take exit from this company, or if you want to book loss and invest in some other company. And one more thing that you can follow in these type of companies, which will prevent you from having a loss of around 60 to 50%, is that whenever you are investing in such a company which has already given a very good run up, first point is do not invest when these companies are at their all-time high. If a company has given a run up of 1000% or 500% in a period of 5 years, there is a high possibility that that company can fall by 30-40% easily. So either invest when those company has fallen, and if the company business is still strong, then you can think of investing. But in case when you're investing in these type of small caps when they are at their peak, then maintain a stop loss. And this stop loss you can also maintain after you're buying at a 40% discount also, because even after 40% discount, that company can still fall further. So if you maintain a stop loss, at least your loss will be limited. But in case that company bounces back from there or creates new high from its top, then you'll be able to generate some return out of it. So this strategy you can follow in risky companies. Always try to put a stop loss. Next company is Happiest Mind. We have already discussed that in the last video, so we'll not discuss this again. So this brings us to the end of this video. We have discussed majority of the companies in the first video itself. So overall the portfolio size is very good. The companies are also mostly good companies. Only few companies are there on which you need to research more carefully and then take the decision after your due diligence is complete. Want to start your investing journey? Then the link is mentioned in the description box. You can use that link to open your free demat account and you can start investing. Bye for now. We'll meet in the next video with some new information. Thank you.